Hi, I'm Clayton Collins, CEO at HousingWire, and today we're coming to you live from the Gathering 2024 in Scottsdale, Arizona. I'm joined today by Ed Messman and Scott Waruka from Legacy Group Capital. Scott, Ed, thank you for joining me.
Great to be here. Thanks for having us.
Awesome. So we're having this conversation kind of on the back end, the announcement of a really interesting deal. But we're going to talk about the deal. We're also going to talk about the industry dynamics that fueled this acquisition. But Scott, can you kick us off with telling us about Legacy and the business that you've been building for the better part of the last 2 decades?
Sure. So it was about 20 years ago. My team's had background in lending, and that's banking, mortgage lending, private lending. And so our goal in starting Legacy Group Capital was we started off as a private lender. We wanted to help builders, real estate investors acquire property, do it a little bit easier than what bank financing provides. Okay. And so that's how we launched our original platform. And we became very successful at doing that. And then over time, as we were underwriting all these deals and got really used to the real estate side, we decided to make a move that not only can we help these individuals finance their properties, but we can go out and source our own deals as well and deliver deals to real estate investors and builders and then lend the money on top of it. And we're one of the only ones in the United States of America that have a platform like this. And so that's where it all started, and that's what we're doing today. 65% of the business we do is to small and local builders and then real estate investors. And we also have one piece of the platform that does a little bit of consumer lending. But we kind of merged this private lending piece with real estate acquisition and development, and it's worked really well for us. And it was time to start growing this platform. We started in the Pacific Northwest in the greater Seattle market, and it was time to take this to some other communities because we've done so well in that community. And that's thus where we were recently. Over the last couple of years, we needed to make a move in certain areas. If we're going to expand our business, how best we do it.
Excellent. So what were the market dynamics that drove the opportunity in lending to these small and mid-sized builders when you were originating the business?
Yeah. So really what it was is we have something that we call the missing middle. Okay. Yeah. And what that is in some of these major metropolitan areas, as you well know, like we'll take Seattle or San Francisco or Denver, Colorado, housing prices have become incredibly expensive, right? And so one of the things that we tried to do is figure out how could we find real estate deals, bring them to local builders, and the kind of deals where they could produce affordable housing. And so to give you an example of what that would be is like, we'll use the Seattle market because that's where we did it. We learned years ago how we can go into Seattle and we can find a house, we can renovate that house, we can build an ADU behind it, and then we can build a detached dwelling unit, put 3 homes on one lot. And because, like the Seattle housing market is 30,000 units undersupplied right now. And those units would be you don't get a big backyard and you don't have what you might have in just a single family home, but you have your own home. And it's in some of the best markets in the country. And so we found out how, we studied city code and we understand how you develop these properties, right? How you condominiumize lots to bring additional housing in. So that's what we did. And we did it so well that we've created hundreds of extra housing units within the cities that we serve. And there's so much of a need for that. And you can go in Seattle today and buy a $900,000 house, which might sound expensive in some parts of the country, but without what we provide, you're going to pay $1.5 million in the Seattle market. Yeah. And so that is the missing middle. And so we're bringing deals to builders, allowing them to build out product to provide additional housing.
So addressing the missing middle is something that helps with affordability in Seattle, but also in other markets. Does the market know, do builders, do real estate agents know about the opportunity to condominiumize lots and do this type of development?
Well, see, that's the thing. So some of them don't. Yeah. But they all, real estate people, they go out and they source real estate deals. But what they do with us is we have a team of 10 individuals that work in the real estate division. So let's say, again, a Seattle real estate agent brings us a deal and we take a look at it, and within 24 hours, the team breaks down, this is a deal in the core of Seattle. Yeah. Here's exactly what you can do with this property. You could build 4 townhomes on this one individual site. And we create a site plan, we create a pro forma, we create a timeline, we even look at comps out the door, and we put a deal together and we turn around and we bring it to builders and say, here's a builder. So for the real estate agent, they get to figure out what can this property be. And so once we figure out what can be built there, we back into what the prices will pay. We deliver it to a builder. The agents get all the listings on those properties. So when we go ahead and ultimately sell them, the agents get all that. So they want to bring legacy deals. The builders are building affordable housing, so typically sells quicker. Our average listing sells, in far under 30 days because it's in the right price range of the market. And so, and of course, builders, there's a lot of volume. We have a builder meeting every month, and we'll have about 50 to 60 builders that come in our company, and we have this kind of big meeting. We talk about best practices, but the reason they're there is because we have real estate deals that they can tap into. And so, we're really serving, the communities that we're involved in.
That's really interesting. All right, so this is a solution to inventory issues, volume issues for agents that are looking for more deals, builders who are looking for projects.
Yes.
The headwind is, do all cities and towns welcome the increased density? So there's certain markets where you have more success than others?
For sure. So we're looking for the real stable markets that are underserved, that have a lack of housing. Again, Seattle's a perfect example. We already know there's 30,000 units short. We can't catch up to that in the next 3 or 4 years, no matter how much work we do. And there's other cities like Denver and Dallas, and there's other markets that need this. And so we're targeting the markets that could really use these services.
So you found a very important sweet spot in the market, working with builders in the small to mid-size and bringing needed density to neighborhoods. But you ventured down a new path. You recently announced the acquisition of Rook. Ed, you and I have had the chance to know each other for several years now. So I'm excited to hear about the transaction rationale, why Legacy and Rook make sense together, and what this enables.
Yeah. So as you know, we started Rook as an HEI company focused around the purchase, right? How do we get that missing middle into a home more affordably? And when we started Rook, the storyline was, I've got 3 kids that are not quite ready to buy a house, but they're close. So the house that we bought when my wife and I started having kids was 1,500 square foot home in suburbs of Boulder. $179,000 we paid for it in 1997. That same house is worth $750 for just a starter home, right? And so this idea of how do we get my 28-year-old self today into a home to start their family, you're priced out, essentially. You got to move out to the suburbs. So the idea of providing an innovative financing solution, but also participate on the building side to create more inventory, was really the opportunity. And then secondly, Legacy has done a great job of building this great platform in Seattle with little technology. And so we built a modern day marketplace at Rook, and now we get to connect it into a business that's up and going and thriving. So that was also a great rationale.
So for our audience members who aren't as abreast on trends in HEI, tell us what is HEI and what trends have we been watching the last few years?
Yeah, right. So HEIs are essentially home equity investments or home equity agreements, and it's a shared equity solution. The companies that have started the space really focused on cash out. So if I want to take equity out of my house without making a monthly payment, they have served that need. And that's been going on for about 7-8 years now with several securitizations. We took that same concept and said, well, can we focus on the purchase side to enable someone to come into a house more affordably, so reduce their monthly payment and to allow investors to come in and own a piece of that house.
Interesting. So to develop the HEI market, you not only need awareness on the consumer side, and then the influencers of those consumers, the agents and loan originators and community members, but you also need capital markets interest. So you mentioned a securitization. Tell us about how the HEI marketplace is forming and is the supply and demand matching?
Yeah, well, it's interesting because I was in New York a couple of weeks ago, and 2 years ago I was meeting with the same group of investors, and they didn't. I mean, HEI was like, what's an HEI? And now they're all wanting a piece of the asset class. And I think it's because there has been several securitizations and several rated securitizations. And I think it's just opened up the audience of the type of investor that can come into the asset class. So I think with that more awareness of the asset, now we're going to start to see more applications of the HEI, or call it the shared equity solution. And you'll see our application, which is focused on purchase. You're going to see other applications as well, because we've been talking to some others about interesting use cases for the HEI. So HEI would call shared equity as a framework, financing framework. And the beauty of it with Legacy is that we can offer to builders. They have to build the unit and they got to sell a unit, and we can offer it to the people that want to buy their units as an affordability option.
Okay, so you mentioned that historically when people think about equity in a home, they're thinking about pulling it out.
Yeah.
But there's a purchase application and a construction application here as well.
Yeah.
Can you talk us through how those products work?
Yeah, so it'll primarily be on the purchase side.
Okay.
And so the way the purchase side works is we'll partner with a community bank or a local credit union who will underwrite the first mortgage. Okay. We'll come on right behind them with the second lien product, with our HEI product. And so you can almost think of it as an extension of down payment assistance. And so we're providing a slug of equity or capital towards the purchase of a home with no monthly payment. In exchange, we get an equity stake in the house.
Okay, so Scott, this market is developing. What attracted you to Rook, and why was this a deal that furthered your ambitions for the business?
So a couple things. First of all, we've created a platform, a lending platform that is very boutique-y and flexible with really unique products prior to Rook. So we have some unique things. If we don't compete against banks and not most other private lenders because we have some unique stuff. When I saw the Rook product, this was not only unique and different, but it was also targeted to exactly what we're doing. It was helping home buyers get into homes that couldn't otherwise qualify. So moving into the city instead of moving 30 miles out. Yeah. And it helped us do that, right? So how I said we were targeting the missing middle by building products and helping builders get there, they were doing it through a lending product. And we all know this. Most young professionals today that want to go buy a house and live in the city, there's only one way they do it, and that's if they have a rich uncle that could give them the down payment. Most young folks have a hard time saving the down payment. They might have the income to make the payment and qualify. They just haven't had the years to save up a down payment. So how do you solve that problem? It's really back to what Ed said. It's fractionalizing mortgages. So how I would explain this in really layman's terms, think about this. I have a kid out there and he's married now and he wants to go buy a house, right? And I have the ability he can go out and let's say he needs to put down $300,000. Yeah. I have the ability to put in $200,000 for him, and maybe he has $100,000, and I'm owning a little piece of that property, but he doesn't make any payments on that $200,000 while he's in it. It all comes on the equity slice in the back. So it's allowing a person to get in a home that doesn't have enough down payment but can afford the payment. And so, you're kind of sacrificing a little bit of your equity down the road. But imagine this: if you had a kid that you wanted to help out, and you're basically helping Johnny and Sally buy their house, but it's in an agreement. You're going to get paid back. You get to share a little bit of the equity. Yeah. It's a great product, and I think it's where the market's really headed.
So Scott, in that scenario where there's a $300,000 down payment, $200 is coming in the form of home equity investment, and the other $100,000 is coming from the borrower. Yep. What does the equity ownership split look like in that scenario, assuming there's also debt and a mortgage on this property?
So it's really a sliding scale depending on how much somebody puts down, because they can put less down, they can put a little more down, and that rises on the equity piece. But at the end of the day, it's a small slice of the equity, and it's really what you're getting as a buyer is two things. You're putting down less, and because you're not paying on that over the first 5 years, your housing payment is reduced quite substantially. To give you an idea, we ran numbers on a house that was purchased for $1.2 million in Seattle. With somebody putting less down with the Rook product, not only would they be putting $150,000 less down, their monthly payment would be $1,000 a month less for the first 5 years. Now you're going to give up a little bit of that on the backside because you're paying less, but it's a way to get people in the area and in the house they need. And so our model is, again, back to why. There's really two big reasons. One is they have a product that I think is going to change the market, and we want to be one of the first guys in on that. And it's really fractionalizing mortgages, whether it's dad helping me out or Uncle John, or just a guy that wants to invest in this area in a property. And we've created a marketplace for those things. So they can come and typically maybe make 15 to 16% on their money while it's in there. And it's with a stable asset, with a great borrower that's fully qualified. And there's an exit strategy out of that. And so it makes a lot of sense. And so it's something that I felt that it was aligned because, again, it was targeted at that missing middle. The product helps people get into house. And then the houses that we're building and designing are also helping people find affordable properties. And you put those together, what it means is this Rook product with our builders, they could build a single family, like say detached dwelling unit, and then there could be one right next door, another builder built, but ours is going to be $1,000 payment less to an outside buyer than the one next door would be. Our builders love it because they can sell a lot more product because the payment is way more affordable. So it makes a lot of sense. There's some dynamics to getting it launched, and there's, it's not the easiest thing to do because you're talking about HEIs on the purchase side, and it hasn't really been done successfully before. So we're doing that right now, but it's what we do.
What about education on the mortgage side? Does the first lien mortgage holder care if there's a home equity investor participating in the transaction?
The ones that we partner with are doing portfolios. They're portfolioing the first.
Okay.
So these are portfolio banks that are willing to hold it in their own bank, which a lot of banks do.
So you said there's community lenders is what you mentioned.
Exactly.
Okay.
Exactly. Yeah.
Yeah, I mean, the interesting thing is, I think there's a movement towards building smaller homes now, right? It's kind of interesting. Maybe not in Dallas, but
maybe not.
but across and this generation, they're used to traveling and staying in places and sharing homes, and I think that this type of housing unit is gonna have tailwinds over the next 5 to 7 years, in addition to just overall supply being needs to catch up.
And we've had a very successful background. We've been doing this for about 18 years, a very successful background in lending. Our portfolio has always been super strong, and banks have always asked us, how do you do it? And the reason is we're experts in the markets that we serve, but we're good at creating unique products because we've done it with a few others. We have bridge loans and we have rehab loans on houses that other banks just can't get their hands around how we put them together. So the thing that's really cool about our platform is not only do we have flexible products, we're a common sense lender. We have our own money. It's not like we're selling to Wall Street or something like that. We've raised our own capital, which means we get to make our own rules. And trust me, that's music to people's ear when they say, can someone just please underwrite my loan for being a good loan, or I'm a good borrower, and look at it like common sense? Not that I met 25 boxes that you checked, or I missed one, now I don't get the loan.
So how do you expand into new markets? Do builders take you with them as they expand into new markets? Do agents or the mortgage community help with the expansion?
Let me tell you.
Grow.
It's awesome. So when we, fly into a new market, and, we've done it in a few, but when we go in, normally here's who we meet with. We meet with the best real estate agents. We meet with the best top mortgage producers because they do loans, right? We meet with a lot of the best mid-sized to small builders, right? And we'll go in and we tell them about our platform. So for the agents, hey, we're gonna be acquiring $100 to $200 million worth of real estate in your area. Would you like to find us properties and then get paid on commissions? They're like, well, yeah, I'd like that, right? Builders, we're going to bring deals to you that are already underwritten, full done, and then we're going to approve you to lend you the money. So we're scrubbing and doing all the deals for you, right? For mortgage guys, you can send us the loans. We're going to do them, and then if we do, say someone comes in and let's say a guy wants to build his own house and we do a construction loan. We call it custom construction loan. That mortgage guy, after the loan is done, he gets to do the takeout loan, which is their long-term mortgage, their regular mortgage, right? And so we're helping agents, builders, mortgage people all grow their businesses. And when we enter into a community, we start talking about our platform because they haven't seen anything like it. They get excited. Next thing you know, deals just start coming in.
But you're not competing with the traditional market. This is you're truly growing the pie. Solving an issue that exists in the market. Without Legacy Group Capital, without Rook, these deals don't get done. These homes don't get built. And
they're great deals, and they're low risk, which is, it's again where the banks are missing things. We're picking them up. And we've had, I've been a part of starting and opening banks before. I've run one of the biggest mortgage banking operations in the country. I know lending. This is where you want to be because there's a whole niche in there that needs to be hit to help the markets move forward and that you serve. And the Rook product is just one piece that is really needed in those. And so that's what we latched onto. And the one thing I would say about Legacy Rook Capital is we've worked really hard to get to where we are. Our systems and our back end and some of our tech isn't where we'd like it to be to enter into a bunch of new markets, because we need to be as efficient as we can be. And getting the Rook team on top of everything else, that's another cherry on top that we need too. So there was really a synergistic fit.
Well, you talk about team. So you have like the capital side, the mortgage banking leadership.
Yes.
Ed and the Rook product with their technology capabilities.
Co-founder Kevin, CTO.
Exactly. So so what is it? So Kevin, what does the rest of the team look like that's going to help with this national expansion, bringing together the product introduction into market, the technology and the capital all at the same time?
Yeah, well, I think from our standpoint, we're bringing our development team over to Legacy Group Capital. We've already done that.
Yeah.
We'll start to expand some of the capital market side, so diversifying our capital base as we go into new markets, and then on the lending side
we
and
have
real
an
estate
all-star
side.
team. I mean, 3 years ago we were 25 people in size. Now we're, I think, 72.
Okay.
But a lot of the key players that have originally been around each other for like 20 years. Myself, I have all the lending and background experience on the whole lending side. One of my main partners who's here at the event, Chris Gurgen, he's one of the most successful developers that started in the city of Seattle and developed thousands of residential small projects. So he gave all that up to join the lending side of things, and he runs the real estate acquisition team, which is a team that brings all these new deals in, vets them, and even in the Seattle market, because we know it so well, the real estate team actually takes a lot of those projects through permit for the builders, so runs all the permitting services for the builders. And the other thing that we do, we have an accounting department of 10 people, and they actually run builder books for projects for, these small builders. They don't have back offices.
Yep.
So running books on a daily basis, permitting projects, they're good at building. So we're helping them along the way to be successful. And when we come into a new community and we talk to builders about bringing them new deals and lining them up with real estate agents and financing them, and we have one last piece that if we have a great project with a great builder, but say they're a little bit light on capital, we can actually partner up with a builder, and Legacy can provide a little piece of the capital to help them execute on a transaction. And so we do that as well too. So we're kind of everything to these guys. And so whether you're an agent, you're a mortgage person, you're a builder, in the areas that we serve, if you don't know us, they need to get to know us because we're helping them build their business.
Yeah, that's phenomenal. I mean, we've talked so much about what the solutions to the inventory crisis are going to be. And I think when people talk about new home construction, they're thinking about in Dallas, going north and like the single family home development. And I think it's been thrown into question, like, can infill and developing in mature communities actually solve any issues, or is that just tearing down old inventory and going up with new, which in Dallas means you're tearing down old historic and going up with 4,000 square feet on edge to edge in the lot. Doesn't create more inventory, but it's development nonetheless. Yeah. But like, we're talking about HEI actually being a solution to the inventory crisis, one of the contributing factors.
Yeah, exactly. Yeah. And sooner or later, it's going to get more predominant because there's a lot of equity that people have in their houses that is untapped and unused. And people need to be able to afford houses. There's got to be something to give here because it's going the wrong direction. If we continued in this direction for another 5 to 10 years, nobody would be able to buy a house in the main cities except for people with a lot of money. And, then it starts changing the dynamic of the community. So we're all about, building the right stuff in the right areas. We're very sensitive to design. Yeah. We go into historical areas all the time. Part of it is you have to keep the historical homes. You have to maybe update them a little bit and fix them up, but you keep them. And then maybe you separate a lot and you put another one in the back, but you try to do it in a design manner so it kind of matches the neighborhood.
Yep. No, I live in a neighborhood where that's being done, so I know the exact dynamic. So for real estate mortgage professionals out there who haven't done a home equity investment deal or don't have exposure, where would you advise people start learning? How do mortgage professionals start learning about home equity investment and the types of products that you're bringing forward to the market, Ed?
Well, as Scott said, we're getting this thing launched. So we're going to create, you didn't talk about Legacy U, which is where we do a lot of training and support for builders and mortgage loan officers.
We personally do a lot of training. So we bring in real estate agents. We do seminars all the time. Agents and mortgage guys, they tap into it. We have video videos. We have a whole library of videos to explain, first of all, what it is, how it would work, and what sort of client it would work, and for what markets it really works in, because it is set up to really serve certain markets. But we do a lot of our own education, but we can only educate so many.
Yep.
Part of the reason we're here is we know we have something good, and we're just trying to create awareness around it, and we want to meet the right people in the right areas that we're headed to, because we can be a great strategic partner.
Yeah, it's phenomenal. Scott, thank you so much for sharing your time and
Awesome
expertise.
meeting you.
Hey, congratulations on the deal with Legacy Group Capital. Really excited to see what you and Rook and Legacy Group Capital can do together.
Thanks. Thank you so much.